Okay, welcome everyone. If you're interested in stock market charts, trading ideas, you've come to the right place. So we're going to start out today with the broad markets. We've got some things moving. I want to point them out. Triple Qs. All right, so the market's not really doing much right now. There is some movement in gold and the dollar. Again, the jobs report came out slightly better than expected, and the market just instantly sells gold. And the dollar gets a bid because it's basically saying, okay, jobs are better. The Fed is now going to raise interest rates. So that's what the market, at least in the gold sector, is saying right now, at least this morning. But I'm not seeing anything in tech. And rising interest rates is usually pretty negative for tech. We're just not seeing real selling in tech. So we'll see what happens around that whole concept of the Fed raising interest rates. Could be a flush out move in gold, and we could be seeing the bottom. I'm going to point that out here in a second. Triple Qs, though, on tech, you've got this upward trend line here on the hourly chart, and you can see we're starting to break. We're starting to break that trend line, but it's not impulsive. It's not an impulsive breakdown. Also, this trend line is not the best trend line. It's just a very short-term trend line. You look at the daily, it's just a few days worth of price action, and then we're starting to kind of barely break. But it's not impulsive, so nothing that I want to key in on. But just want to point that out. So in general, not a whole lot going on. Watch for tech to break, but we have to see it before we take action on that. So looking at the SPY's up today. That's likely because the banking sector is up, the financials. And then, so the SPY's catching a little bit of a bid, grinding, it's basically flat, but it's slightly higher. Again, watch for tech to break. If tech breaks, the SPY's not going to keep moving higher. But in general, I don't have anything new to add to the SPY conversation from yesterday. I mean, it's negative divergence is there. We're just grinding higher. Nothing's changed. So we'll move on. IWM, again, IWM, big sideways range over the last, many months. And we're just chopping within that range. So in general, nothing's changed there. Here's your large cap tech, starting off with Google. You can see the last few days, we're just grinding along this support line right here. And this support line is your upward price channel in Google, coming off the March 2020 lows. Really created this kind of upward price channel. And we popped above it, but now we're just barely holding on to support, just grinding over the last week, basically. Very small candles, so that's price compression. We should see a big move come out of this one way or the other. Now, the negative divergence on this tells me that the move is going to be to the downside, but we got to see that thing break. So until it cracks the support and starts to get closes below that trend line, it's going to continue to grind. Apple, same thing. If I move this, we've got just this sideways price action over the last while, and it's just really going nowhere. We have negative divergence on Apple, telling us that we're going to get a correction or a downward move soon. But again, we need to see the support break. Right now, I got support on this 144.50. If that goes, I think we'll start to move down, and we'll watch for other signs of the market in general moving down if we see Apple break. Okay, let's get to gold, because gold's the one that's moving. Obviously feeling some pain today from the gold trade because I'm long a lot of these miners. We'll point out what I'm seeing. So in gold, major level right here on the hourly, this 1790, it cracked this morning when the jobs news came out. So that's an impulsive breakdown for sure. Looking at the daily chart, we are coming down to the next level of support, which is sitting right there at 1756. And that's that is the next level of support. So we'll watch for some sort of a reaction there. You can see this, extended out. That's a good level of support as well. We held support back there previously, so you can see we basically 1790 isn't the end all be all. Before we cracked below it here, hit that support level, popped above it, traded up there for about a month, and then today impulsively breaking down. So now we need to watch 1750. If that goes, if 1750 area goes, I don't see a lot of support in gold until we get down to about 1670, 1680 roughly. So that would be your next level of support to watch right there. Okay, so we need to see how the day closes out. Obviously, it's early, but we are getting a break of support in gold. Okay, looking at some of these miners, though, they're actually looking like we're just backtesting support. So this is Barrick Gold. You can see really this downtrend line coming off of May 18th on the daily chart. We rolled down and we broke above, and we're coming in for a back test today. We didn't quite tag it, but we got pretty close. And it is a divergent low. You can see we made a new low in price right here. Slightly new lower low in price. And yet the momentum is still higher here on the RSI and the PPO. So if the RSI starts to turn up, let me zoom that in. So RSI is pointed down right now, but if we start to turn up, it will be another divergent low. So again, looking for that. I'm looking for the bullish divergence to continue to build, telling me that we're not going too much lower from this range right in here. And this is the area that you'd want to be buying if you're going to hold bullish divergence and start to build support. And so again, I added a little bit more to my Barrick Gold position on this back test, and I'm looking for us to hold. Now, if we take out the bullish divergence that we have and the RSI just starts to turn lower and we make a new lower low, it'll look something like that, then that would be pretty bearish and we'll watch for lower prices. But as long as we can continue to hold a bullish divergence, and you'll see the PPO here, we still have bullish divergence as well right there. So new lower low in price, higher low in momentum. That tells me that we're just backtesting this trendline support, and we're going to actually start to build a bullish leg higher. But that's what's going on in that one. Okay, so sorry, I had to take a quick break. Anyways, Barrick looks like it's at support, looks like the area where you'd want to be buying it at. That's what I was doing. Another one I was buying is this HMY, adding a little bit, right? So I'm building a position. It's not buying it all at once, but it is at support right now. This is 378. That is support. You can see as we roll out, that was a level of support back here, as well as support again right through this cluster. Now it dips, it's not going to just stop on the penny typically, but it's the area of support. And we are right back down there today. So I'd expect that to hold. If that doesn't hold, you can always stop out somewhere below. On HMI, there's also this downward trend line, which was the former resistance within this channel that we broke out, backtested once, backtested twice. It could potentially come all the way down and backtest another time down at 337 area. So keep an eye on that. That is potential, and that would be support as well. Looking at the RSI and the PPO, we're not making a new lower low today, so maybe if we go a little bit lower and dip below this 365 area and then start to turn up, we'll have bullish divergence. Right now we have a higher low in price and a higher low in momentum, so it's not diverging. We need to get below this price 367 for the bullish divergence to be there. So we'll watch for developments on that one. Agnico Eagle AEM, another chart that looks like it's pretty much in the buy zone. And I didn't add any yet on this one, but I am looking for maybe a little bit lower price. You can see today, as I zoom in, we got down near the lows. It didn't quite make a new lower low, but very close, kind of an equal low. And yet the momentum is higher momentum as of right now. So you can see this is bullish divergence. We don't have it confirmed yet. So what we have is upward momentum, and yet the RSI is still pointed down. So you want to see that confirmed to start to turn up like that to help confirm that divergence. And if we do that, that means that we have a new divergent low. I suspect they're probably going to come down and hit this trend line down at 58.35 roughly. So a little bit farther down. They might not do it today, and that would be another 2 to 3% down. And that's the area of support. So if you have bullish divergence and you're backtesting that trend line support, that's the area that you'd likely want to be buying at. Okay, so watching for that. GDX, this is just general miners. So you can see here that we do have a new slightly lower low in price than the former lows. There's your former lows, and there's your new low. It's kind of an equal low, but we have it on bullish with bullish divergence. So there's the RSI, and you can see the PPO is clearly higher. Now we're not confirmed. Again, we still RSI is pointed down, so you want to see this start to turn up some point soon to confirm that divergence. But if we do, then that's just an extension of the bullish divergence. And bullish divergences can build for a while. Obviously, they can build, but it is showing signs of strength in terms of the momentum. And then you're just looking for price action to really snap back and start to rally. So I'm bullish still on these things, even though the price of gold is getting smashed down a little bit. I'll watch for that 1750 level to hold. The miners still look bullish, and yes, they are coming down today, but they are holding the support levels. They do have bullish divergences as of right now, so I'll watch for developments around that. If that changes, then we'll look for opportunities to exit the miners. But as of right now, I'm still bullish on these things. They still look okay, and we just need to see the price start to react to the divergences that are in place. Okay, someone asked me to cover CAR, asking if I was still short. I am not short CAR. Let me explain what I did on CAR, and I talked about it on my video back at the time, but perhaps you missed it. So CAR broke. So CAR broke its trend. Here's your upward trend on CAR. Nice clean uptrend line, negative divergence at the high with these divergent highs. We then broke trend right there. So that was your sell signal. Really, you want to take that short right there on that day. That's the ideal time to take that short, as on July 6th. And that's when I took that short. Then CAR sold all the way down. It hit a first level of support, kind of chopped through it there at 72.46 a bunch. On this day right here, we dipped all the way down. We started to head towards the next level of support, 62.66, but I saw that they started to recover it, and I covered my short right there on that day. And that would be July 19th. So you can go back and watch that video if you missed it. But that's where I covered it. And it then rallied. So I did not have a position on the strong rally, and I didn't re-short it right up here. I wanted to, but I was looking for a little bit higher prices. I was looking for it to run into this trend line up here, maybe pop above it a little bit. Up around that 91.65, 91.50 area is where I was looking to short it. And I didn't get the opportunity. They came out with earnings and smashed it down the following day. So I didn't get this move down. But of course I had covered it down here. Now you can see it's bouncing. I think we're going to roll over. I think this is just kind of a counter trend bounce here, and I would expect it to probably roll over. I don't know if it's going to happen. It's likely not going to happen this week, but that's a pretty big rejection candle right there at that trend line resistance. So I would look for lower prices. I mean, I was looking back on this, and I can't find a candle that big. Really going back this entire bull rally since the March 2020 lows, I can't find a red candle that big. The biggest red candle I can find is back in the COVID crash. So again, just a big rejection candle, big sell-off. Little counter trend bounce, I think, but I would expect us to head lower. And as you can see, we're starting to put together a downtrend. We had highs up here. We have lower highs right here. We have a low. Now, if you see a lower low, that would be clear, obvious time that to know that a downtrend is intact. So you could look for that if you wanted to wait for that. But again, that's a ways down there. I think you might miss a lot of opportunity. If I had to pick one way or the other, I'd be short. I don't have a position in this because I didn't get a good entry. I would have, liked to short it right at that back test. Didn't get it. So I think if you look at the hourly chart, maybe we'll stop right at this 85.11. That might be the area where, right in there. So watch for that. Okay, Target, TGT. This one's been a very strong stock, and it's definitely uptrending. So, any trade that you take is going to be a counter trend take if you're going to short this thing. But again, I don't want to buy a stock after a long extended uptrend. I want to look for areas to short it, and especially when you have big negative divergence. See that negative divergence, how we've just been dropping off on the momentum indicators? That tells me that this upward momentum is fading and it's going to reverse soon. So we're looking for a break of the trendline support on the daily chart, which is right here on the blue line. And you can see we're just starting to crack it today. It's not impulsive. If I look at the hourly, we do have an hourly close below that trend line. And this is kind of what I was thinking is we might break this trend line before earnings and then kind of just drift. We got earnings coming out on August 6th. Must be after the bell today. Let me double check that real quick. Okay, I'm not sure why this says August 6th. Earnings are coming out on the 18th, it looks like. So August 18th. So what I was thinking is maybe we'll just kind of break trend, drift sideways into earnings, and then potentially break. So we have to watch that. But starting to crack, it's not impulsive. Things to watch there. I'm not short this. I'm not going to short it until I see some impulsive break of trendline support. And right before earnings is not a trade I usually want to take, even if we break. So I'll probably look to just let this thing run into earnings and then take a position after that if we have a technical setup. Okay, let's follow up on this net Cloudflare. I actually covered this short trade this morning. I shorted it yesterday into earnings. They gapped down this morning and I covered it. One of the reasons why, for one, the major tech stocks haven't broken. And if you look at this net right here, we have really what I was watching is this red trend line, not these little blue ones, but this red trend line right here. This is your major trend. And you can see we broke trend. We've been backtesting it for quite a while. We backtested it once, twice, 3 times. And when the earnings came out negative today, we did break, but the selling's not that impulsive. We cracked, and the buyers are in there buying it up this morning. So I covered it, took the quick profit, and looking for, I'd like to see the major tech stocks break. Otherwise, I think what they're going to do on this is probably bid it up and do a back test of the trend line. One of the reasons why I didn't like the short, and it was really just a starting short position, is we're not at trendline resistance. So I'd be way more interested in shorting it up here at trendline resistance into earnings than I would be kind of slightly below that trend line into earnings. All right, so that's what I did on that one. I'd be looking for, right now I'm probably looking for a bounce up there and then maybe an opportunity to short it right up there. We still have negative divergence on this. So it tells me short's the way to look. That's the direction to look. But I'd like to get it up at resistance, not just kind of way below. Okay, so biggest thing I'm really looking for is tech to break. Again, the market right now is trading, at least today, and it's just one day, but the market is trading as if interest rates are going up. So that's why you're seeing the banks rise, you're seeing gold sell off. And typically interest rates rising is negative for tech, but we're not really seeing a reaction right now in tech. So looking for that to show up. Maybe it does, maybe it doesn't. And then I'm looking for gold, really the gold miners, not so much gold bullion. I don't trade gold bullion, but I trade the miners. And I'm looking for those to hold some of those bullish divergences that are currently in place. That's really all I have, guys. So leave me a thumbs up if you guys find some value in the content, and I'll catch you guys on the next one.